We're smooth 98.1 FM. Good morning and welcome. It's time for Business Express, and my guest is already waiting as we get started this morning. On the show, I've got someone joining me as we begin. Samson Owolabi is in-house already and is Associate Research and Portfolio Management, Z Crest Wealth. Good morning, Samson. Welcome.
Yeah, good morning. Thank you for having me.
And just to bring you up to speed, you can be part of the conversation this morning if you send us a WhatsApp message reacting to the story on Business Express on 0809 444 0981 will be where we read all of the messages. So, Samson, Nigeria's Q1 2024 capital importation rises to 3.37 trillion US dollars. Well, and as we look at it right now, so out of this figure we're looking at that came in, we saw that 61.48%, that's about 2.07 billion US dollars, go to portfolio investment. What would you attribute this to?
Okay, well, concerning that, what I would say is that it can be attributed to many factors, and but the major one that we should attribute it to is the current realities in the country, where we talk about inflation, where we talk about interest rates hike, serious hike in interest rates, and also when we talk about insecurity and the state of doing business in the country. Now, when you look at these figures, you realize that foreign portfolio investment had like the largest number. And if you want to understand what's going on, I think we need to know what it entails. So, for the capital importation figure for Nigeria, we have foreign direct investments, we have foreign portfolio investments, and we also have other investments, which encompasses other parts of the FM of capital importation that is different from FPI and FDI. Now, when we talk about foreign direct investments, those are direct investments into a country for a long term. It comes around, maybe setting up a business, setting up a company in a particular country, or starting up something that is intended to be more than a year in that particular country. Now, when you now look at foreign portfolio investments, it is something that it relates to short-term investments in the country, and that is where we are seeing a whole chunk of that investment in the country. So, why is it like that? The simple message here is just that people don't have the long-term view. Foreign investors, rather, they don't have the long-term view to invest in Nigeria. They just want to take the short-term route. That is just the major headline.
All right, this will now lead us to the question of, well, foreign direct investment attracted only 113 million US dollars. That's about 3.53% of that amount we are looking at right now. What do we need to do to increase this FDI?
Well, concerning that, we need to do a whole lot. There are so many things that we need to do. It's not just about, and it's not a matter that can be done within a day. And when you look at it, you realize that what drives investors to stay for a long term in a country, number one thing you have to look at is that you have to look at maybe there are incentives for that particular company to come into that country. You look at the policies on ground. Is that country a favorable one for foreign investors? You look at the ease of doing business. Is it easy to do business in that country in terms of like the cost of living, the standard of living, and the cost of capital? You also look at the standard of living of the people. Is there a readily made market in that country? When you look at these factors, these are the things that foreign investors use to like analyze and say that they want to stay in the country, at least the major ones. However, for the sake of Nigeria, there's ready markets. There is there's markets, there is we have the population, we have the numbers, but the major issue we are having currently right now is the fact that the cost of living is seriously a major issue. Inflation is at record highs, close to 34%, and we are seeing that the interest rate is at 26%, 5%, which is significantly high. The cost of capital is seriously high for businesses in the country. It is affecting them. This is one of the major reasons why we are seeing them, exit the country. Now, this is pure economics. This is, it leads to like it's explains the interface or the interchange between interest rates, inflation, government spending, government policies. It is looking at the monetary policy side and the fiscal policy side. So when you look at these factors, these are the major issues causing it. We can't just see that, or maybe we want to increase it. We have to go back to our drawing boards. We have to say that, okay, even if we want to increase interest rates, what are the major factors that we have to do to boost the economy? And the serious issue again is the depreciation in naira. Naira is depreciating significantly. That is a major factor. Is one of the issues that we are having right now. So it is making it hard for foreign businesses to come into the country and start a business. So if we want to solve this problem, we have to solve all these issues one by one. In fact, we have to take steps of making sure that foreign investors can come into the country, they can repatriate their funds easily. The
Mm,
FX volatility is not at an alarming rate. The FX, our currency is strong and relatively stable enough for foreign investors to make their projections and their cost and revenue projections to make those ones. We also have to make sure that we have policies on ground that are not the plus for policies. We're saying that we are going to have a policy today, another one will come tomorrow, another one will come again tomorrow, and it's just messing things up. So if we have stuff like that in ground, I believe those are like the starting points for us to like to make a change.
all right. So this leads us just to get back to the listener. If you want to be part of the conversation this morning, we're happy to get your thoughts across. That's because the topic for us is Nigeria's Q1, that's quarter 1, 2024 capital importation figures are out, and it shows rises to 3.37 billion US dollars. And we've got Samson Owolabi, Associate Research and Portfolio Management at Z Crest, helping us break it all down. So let's move on quickly now to portfolio inflows, what is called hot money as it is. So just help us talk us through that and then link it to banking sector attracted 2.06 billion US dollars of the amount, 61.24%. What are your thoughts on the development?
Okay, so thank you very much. Now, the concept of hot money in simple terms, just imagine you have a bundle of naira in your hand that is very hot, or you're carrying a hot pot. You won't want to hold it for long in your
Mm,
hands. You want to drop it somewhere, right? That is just what hot money means. It's just like the simple definition of hot money. In economics, it's just about the kind of funds that in this context now, in the context of capital importation, is the funds that come into a country which is not meant to like go for a long term and is meant to go for a short term for periods relatively within like a year, not more than a year. Now, when you look at it and you'll be like, okay, why is it that it's going to the banking sector? There's liquidity in the banking sector. People can easily like trade bonds, trade bonds here, trade shares. They can easily like make loans and get their repayments back easily and fast. So that is why we are seeing the larger chunk of it go to the banking sector. Also, the Nigerian financial system, capital market system, is not that robust that it inculcates some aspects of the market that it will like that will attract other sectors also. So those are like the major issues that we are seeing right here, why it is only with the banks and we are not seeing it outside again. And just to like retreat again on the concept of hot money, I just want to like make this explanation to be quite let's say more understanding for our followers. There's something called carry trade, which is why we're also seeing foreign portfolio investment grow. Carry trade is when an investor in another country is trying to like take advantage of high interest rates in another country. For example, in the United States, currently as we speak, the US Treasury bill 1 year is currently at around 4.9%. Now, our own 1 year Treasury bill we can get is at 26.7%. Now, when you look at these rates, you realize that this is something that if you want to compare, if a foreign investor wants to take advantage of what is happening in Naira, all he has to do is to convert his pounds or convert his dollars rather to Naira and then invest in the Nigerian treasury bills. And when he's done, after that particular days, he's going to convert his money back and make his results after the 26.7%. Now, how is he going to make profit from this gain? All you just have to do is that you have to deduct 26.75% from 4.93%. Now, when you do that, you'll be left with like 21.82%, right? Now, that is the gross earnings for that particular investor, that for every 100,000 naira you invest is going to get like 21,082 21,082 like naira from there. Now when you now look at this, when you now want to consider the fact that the Nigerian naira might depreciate, let's say the Nigerian naira depreciate by, let's say, maybe 15% during the 364 days, the net gains is going to be 6%.
Mm.
So that's just going to be around like 6,000, so around 6,000, and when you now see that particular amount, that figure, when you compare it, you realize that it's still better than the 4%, 4.93% is going to get in this country. That is how carry trade works. Now, the reason why they've been hiking interest rate, which is also one of the reasons they want to like use to boost the naira, is because they believe that if there is more demand for naira by foreign investors trying to get that carry trade opportunity, is going to boost the value of naira. But in this situation, naira has been declining aggressively, and if our currency is declining aggressively, it is going to wipe out all the gains on carry trade that a foreign investor will get from an investment. So when you look at all these factors, you realize why hiking interest rates can have an effect, why the interest rate and the exchange rate system, how it impacts these carry trade opportunities. So these are all the factors that are intertwined in all these issues that we are raising.
Thank you very much. And very enlightening. It's a 101 you've just done for me this morning, I believe, for someone listening with the explanation you've given. So please, let's touch up Lagos as we sum up the conversation now. Lagos State attracted 2.78 billion US dollars. That's about 82.4% of the total amount that came into Nigeria. How can other states compete? Because we see, even aside from Lagos, maybe Ekiti and the FCT made small efforts to just get a chunk of it. So what were the other states doing? Speak to us about this briefly.
Okay, well, number one thing you have to understand is that for every company that are in this country, their head office is always in Lagos, and some have theirs in Abuja. So, and when this comes around, what that means is that all these foreign investments is going to be going to Lagos State. When you look at major banks that we have in the country, their head office is always in Lagos. When you look at major companies, their bases, their main headquarters, their main operation is always in Lagos. So that is why Lagos is a target place. The major financial institutions, major oil institutions, major players in the country, they are in Lagos. That's why we are seeing Lagos take the chunk of this capital importation. We need to spread out. We need to ensure that there's enough infrastructural development in other states that's going to make those other states attractive enough to get all these inflows. So that's just the major reason why we are saying that. So assuming like some banks also have their head offices in other states in the country, maybe like the I don't want to mention some states now, but assuming they have their headquarters there and they have their core business there, then we are going to see a change in the story. So infrastructural development is key. Technological advancement is also key.
All right. Well, even because we want them to, because we seem to want them to go to other states when these investments come in, i.e., Port Harcourt, Delta,
Mhm,
Bayelsa, and all of these
mhm.
places. These are all spaces waiting for investments to come in. But what can we say to you this morning, Samson Owolabi, Associate Research and Portfolio Management, Z Crest Wealth? Thank you for your time and your insight as always. Thank you so much. Have a great Tuesday.
Yeah, thank you very much.
And to you for tuning in, we say thank you so much for your time. That's the size of Business Express on Smooth 98.1 FM. My name is Omasheye Ashenua. Good morning.
Bye bye.